Hello, good afternoon and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. A breather is what we could say is coming in for the markets today. So look at the Nifty, 25,349. Is recovered from the day's lowest point. In the last hour or so, we've seen that recovery coming in from the day's lowest point, but still a breather because we've seen those gains coming in the last few trading sessions. Last week was the second consecutive week of gains. This week also, we've seen the gains coming in for the most of the week. So some bit of a breather that at least we're seeing today in the trading session. Now, in terms of what is not doing well today, Nifty Bank. That's not supporting overall in terms of an up move, right? Nifty Bank is also down 0.4%. So obviously the weightage overall that comes in from the Nifty Bank in the Nifty is also quite high. And that is why that bit of a decline for the Nifty as well. Broader end of the market, Nifty mid cap and small cap, managing to hold on to some bit of a gain is what the Nifty mid cap is doing as of now. So look at the significant recovery at least for the Nifty mid cap, right? It opened up, then it fell down, and then again around the day's highest point is what the Nifty mid-cap is trading as of now. Small cap also is managing to hold on to gains of almost 0.08%, 0.1% approximately is what we're watching out for in terms of the small cap as well. PSU banks, that's managing to do well in today's trading session. So that is what we'll be keeping an eye out on. But this is a show where we solve all your stock-related queries, and to do just that, we have our independent market expert, Shahina Mukadam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher. Shahina, as well as Vaishali, good afternoon. Thank you so much for joining us on the show as always. Vaishali, let's start by looking at some bit on the technical front for the Nifty and Nifty Bank. What are the important levels now that one should be keeping an eye out on? And, if we manage to see a bit more of a recovery by the day's end in the next 1.5 hours, what will it mean for the Nifty as well then?
Very good afternoon. Yes, I think happy days are here again as far as the market is concerned. So Nifty, well, we saw a good run coming in during the week. So I think 25,300 levels is held on. So we do have our open target of 25,500. So pretty much close to that. If there is a bounce back coming in, I would expect Nifty going towards that. And Bank Nifty also gradually towards 56,000 levels.
Okay. Shahina, let's get your view also overall in terms of the markets, broader end of the markets managing to do a bit better today. What are we watching out for going forward now? Do you think that mid-side and broader end of the market is something that could do better? GST, the new rates are going to be coming into effect from 22nd of September. Now, what should we keep an eye out on?
Yeah, I would see some sectors doing much better going forward in the second half. You have auto actually, which likely to do better. So some of the stocks over there you could look at for the second half to add to your portfolio. I would also say banks. While today there may be some bit of softness in the overall sector, I think banks also should do better in the second half. Infrastructure, I think that's another sector that you could look at. Defense. So I think there are pockets which you can keep adding to your portfolio. I believe overall second half should be better.
Okay, you expect overall second half should be better coming in, and some of the sectors also that are highlighted. On that note, let's get started with the queries for today. And the first query for today is coming in from Lee Jose, who is from Kuwait. He is holding 10,000 shares of Ujjivan Small Finance Bank. Price is 32 rupees per share. Currently, Ujjivan Small Finance Bank is at 45 rupees approximately. He's holding it since the last 4 years. Now, what should he do with this, Shahina? Should he continue to hold this, or should he get out of the stock now?
What I believe is that price to book being 1.5 times, the upside for the shorter term may be a bit capped. At the same time, he can take some profit off the table since he's holding it for a long time. He can take some profit, but he can hold the rest for a little longer term period because they have their application for the universal banking, which is, we are expecting by this year end, RBI should approve it in principle. And when that comes, then the management plans to change the overall business of the bank. If, for example, now their loan book is about 33,000 crores. Over the next 5 years, with universal banking, they want to take it up to 1 lakh crores. So, they're looking at a very strong growth. And to fund that, they will raise funds. They're targeting about 2,000 crores over the next 1.5 years. So to an extent, the downside for price from here seems limited. So it looks more like very little risk You can continue holding at least part of it, hold it for the medium to longer term.
Okay, hold part of it for a medium to long term, and yes, that put out that path that they have in mind till FY30 as well. That almost indicates almost a 25% growth in terms of CAGR that we could watch out for over there. So that is interesting. But Vaishali, on the technicals, what would your suggestion be? Should they continue to hold, book out some bit of a profit? What should they do?
Well, chartically, it looks much better. I mean, it's showing signs of revival. And if I heard it right, I think he has bought at higher levels. So 44, right now it's 45.90. So 44 acts as a very good support level. He may average out at these levels as well and run through the...
Vaishali is bought it at 32.
32. Oh, okay. So continue holding, and I think the stock is ready for an upward move. It can go towards 52 to 55 levels in times to come. Well, so if time is not the worry factor, I think you should hold it.
Okay, if time is not a worry factor, continue to hold it. That's a word from Vaishali. Keep an eye out on those levels over there as well. Next query for today is from Prasad, who's writing to us from Kerala. He's holding 215 shares of Infosys. This is at a price of 742 rupees per share. Now he wants to know if it's worth participating in the buyback and sell the proportionate offer. He also wants to know if there is any chance for the stock price to go up after the buyback. What are we watching out for now? Shahina, what's your view coming in for Infosys? Now, when you look at Infosys overall, right, from his buy price, that's seen a good move coming in. But otherwise, in the last 1 year, it's not done anything, right, in terms of a return. So what should an investor do now? And is buyback a good option for at least a viewer to go for?
Yeah, it's like a good dividend actually. Because even if he tenders the whole quantity into the buyback, I don't think more than 3 to 4% at max will be absorbed. So it is a dividend. Actually, it's a good dividend. So yes, he should offer it into the buyback, and most of the quantity will be left back with him. Then I would believe it is, I would say you can continue to hold, review it later, of course, but continue to hold because valuations are not very expensive. If you see 1 year forward is about 20 times. And we saw in the first quarter, their order book is pretty good. You know, they did much better than what was expected. Deal wins were better this year, are expected to be better this year than what they were last year. At the same time, I think there are issues like, for example, US, what is going to happen with the visas and, you know, overall sentiment for the sector. So I would keep a watch later, but for now, you tender it in.
Okay, for now, tender it in, watch out later, but continue to hold. You know, if there's anything left back also, review it at a later time. Valuations are not too expensive. On the charts, Vaishali, is that the same story for you? Or maybe look at some of these other smaller IT cap names, would you suggest that?
I think, well, one stock in isolation, I would definitely not suggest. But yes, Infosys, coming to Infosys, it is showing signs of improvement. Or in fact, whole IT pack is showing some signs of revival. So I would say continue to hold. And if you're asking me about other stocks, well, Persistent, Coforge, these are all good stocks which are getting into a trend. So I would say a basket of mid cap and the large cap should be good.
Okay, keep an eye out on that. As of now, not much of a worry here. But let's move on to the next query then for today. This is for RailTel. We have Stephen Mani, who's writing to us from Bangalore, holding 3,000 shares of RailTel, and this is at a price of 350 rupees per share. Stock is at 394, saying that he can hold it for 5 more years. Should he continue to hold or look to sell this one? Shahina, RailTel, all these railway stocks, you know, just last week, this week, we've seen them seeing a run-up as well. Today, maybe RailTel is taking a breather, but there are a lot of order wins also that came in the recent time. What should they be doing with this? Continue to hold or sell RailTel?
I would say as of now, continue to hold. It's Navratna. It falls under the railways, but actually, if you see, railways accounts for only about 30% for their revenues. Remaining 70% is from other sectors like construction. Of course, maybe partly for railways or whatever. But there are other infrastructure contribution that come in for the revenues. I would say valuations are not cheap, you know. It's a small cap, 10,000 crores market cap. Valuations about 20 times 1 year forward, EV by EBITDA. At the same time, the order book is so strong, currently about 6,500 crores. They're targeting within the next couple of months, it will go up to 10,000 crores. Then if you look at valuations over 1 year forward, it's about 2 times turnover if you look at it in terms of market cap. So I would say you hold and it's going to be a steady performer. Don't expect it to be a multi-bagger.
Okay, steady performer, not a multi-bagger. That's the word here right now. Vaishali, RailTel on the charts and technicals. What would your suggestion be? Hold or sell?
Yes, so since 5 years is the horizon, I'm looking at the monthly chart and I think it's getting into a trend. We've seen good corrective move coming in. So I would say keep a stop loss of 320. And once we see good momentum and good price action happening, I think this stock can go towards 550, 600. So I think there is a lot of upside. Continue holding.
Okay, a lot of upside. Continue holding. That's the word from Vaishali on the technicals. Next query for today is coming from Krishna Kumar, who's writing to us from Chennai. He's holding 300 shares of ONGC. Price is 240 rupees per share. Wants to know if he should continue to hold or look to sell this one. Right now, the stock is at 235. So they're making a marginal loss on this one. Shahina, ONGC, what would your view be?
I would say it's better to switch. He's not making much loss, and this is not going to be a stock or sector that's really going to give you too much money. Crude oil prices are actually low, and OPEC is now increasing production that we heard in August, September. So I would say that, the quarter numbers also in terms of revenue, I don't think it's going to be too much. Even first quarter was marginally lower. Profits also, though they were good in Q1, I wouldn't bet on it in the rest of the year. And what I believe is there are other stocks like you could switch to, I would say even Reliance would be a better bet. For example, ONGC is planning to invest double the amount of capex into renewable energy, around 60,000 crores compared to what it is in its own sector. So to an extent, better to get into a stock which already has made considerable investments and is likely to start showing results in the near term. You could also look at Tata Power if that is a sector you want to look at, but I would say switch from ONGC.
Okay, switch from ONGC. That's a word from Shahina. Vaishali, what would your suggestion be? Because when I'm looking at ONGC, last 6 months also, it's just been in that range, right? We're not seeing it see a significant up move or not a significant downside as well. So right now, what should the viewer do? Would you also say get out of the stock?
I totally agree. It's been a laggard forever. So I think exit, and Reliance is a better stock to get into it. So yes, it's a switch from my side.
Switch from Vaishali's side as well. So ONGC switch on the fundamentals and the technical front. But on that note, we're going to actually slip into a very short break, viewers. And as we're slipping into the break, here's a reminder for our viewers that unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access. Our premium members experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back to Halftime Report on CNBC TV18, and Nifty as of now is where we started the show with. So not much of a move that is coming in there. Still down 0.2% approximately for the Nifty 50. But let's keep it going with your stock-related queries. We still have with us Shahina Mukadam as well as Vaishali Parekh. Let's move on to the next query. This query is coming from SK Datta, who's writing to us from Kolkata. This is an investment query. Now, he's planning to switch from Asian Paints to Garden Reach Shipbuilders and wants to know if this is the right choice. Shahina, Asian Paints, switch from that and look at Garden Reach Shipbuilders. Would that be a choice that you would suggest coming in right now? Garden Reach Shipbuilders as such has seen a good move also coming in the recent times. What would your view be?
Switch from Asian Paints, yes, I would say that it is a good switch. Despite the stock having corrected by almost, I think, 20% in this last 1 year, still valuations 1 year forward are still expensive. It's about 50 times PE. Also, if you see on in the Q1, we saw volumes were decent, 4%, but average realizations were impacted. Now, in the rest of the year, while raw material costs may come down and you may see some stabilization, I think the competition going forward in the longer term is going to be much more intense with so many new players coming in. So I would say it's a good switch. Now, if you're asking me shipbuilding, which to switch, I would prefer Majgaon shipbuilders to Garden Reach because it is a much bigger player. And secondly, in terms of valuations are more attractive for Majgaon compared to Garden Reach. Of course, neither of them are cheap, but Majgaon, if you see on a EV by EBITDA basis, it's about 20 times. Whereas if you see for Garden Reach, 1 year forward, EV by EBIT is about 28 times. So to that extent, even if you look at the order book for Garden Reach, even 1 year forward, like I think they're talking something like about 40,000 crores. And if you look at Majgaon, they're talking of more than 2 lakh crores. So I would say if you want to switch, but Majgaon dock, in my view, the only caveat here is that government holds 81% in Majgaon dock. So at some point in the longer term future, you could see some issuances from there. But I would still say that the current price would be definitely protected.
Okay, current price would be definitely protected. Switch from Asian Paints, that's surely the word, but instead of Garden Reach, you would prefer Mascow Dock. That's the word there. Vaishali, what would your suggestion be? Should the viewers switch from Asian Paints and look at Garden Reach builders, or would you also suggest any other name?
Definitely a shift. But I do like Garden Reach because seeing the past data, it has shown very good run up. And now that when I'm technically also seeing the projections from here, I see a lot of upside from here. Like currently it's at 2600. I think the stock is ready for a takeoff and it can go towards 3400 to 3800. So for that purpose, at least I would say Garden Reach is good.
Okay, Garden Reach is still good. So you're saying that even in the last 6 months, you've then seen that 60% return and there's still some upside that is still left here, right?
There is lots, yes.
Okay.
It's 2600 expected target, projected target is 34 to 3600.
Okay, 34 to 3600 is the projected target. Keep an eye out on those levels over there for Garden Reach. But a switch from Asian Paints, that's the word from both our experts. Mascow Dock, Garden Reach, you can do your own research and look at that as well. But levels are also given by Vaishali. Let's move on to the next query for today. We have it coming from Parag, who's writing to us from Navi Mumbai. He's holding 100 shares of L&T Finance and this is at a price of 166 rupees per share. Wants to know if he should sell now or wait for the stock to move up. Now he's bought it at 166, making a profit. Shahina, L&T Finance.
I would say hold as of now, because while price to book is not cheap, currently it's about 2.5 times price to book. The management has come out with very strong commentary for the second half of the year. And this is supported, of course, by the GST cuts that are there and auto being a major segment for them. I think the second half growth is going to be much better than what we've seen in the past couple of quarters. So I would say it is a hold as of now.
Okay, and L&T Finance, your view, Vaishali?
It has been an outperformer, though it's in an overbought zone, but we still have higher projections. I think the stock is ready. It is not even correcting, even when the market has been volatile. So I would say continue holding with a trading stop loss of 230 and look for a target of 285 would be the first target. And it can perhaps even go towards 300, 320 levels. So in my opinion, it's definitely a hold.
Okay, definitely a hold there. Shahina, next query for today we have is coming in from Shanmuga Verma, who's writing to us from Kerala. Investment query, planning to invest in Ixigo for a period of 3 years. Would you suggest that?
Yeah, but not at current levels. Okay. I would suggest that my preferred price would be a little bit lower, around 240, 250 type of levels, because in terms of valuation, it is a bit expensive if you look at it over the next maybe 1 year. So, but they're doing well. I would say that, overall the growth has been very strong, and being a platform company for bookings, they're doing well across the board. If you take trains, flight, bus, and in fact for trains, they have also had new tie-ups in the last couple of weeks, I would say. So it should do much better going forward. But the only thing is that, why I'm saying buy it at a lower price is because it is a widely held stock, new issue, and it's widely held by a lot of Ps, FIs. So to that extent, if we see corrections, it's better to get in at corrections and not when the stock has moved up so sharply.
Sure. Okay, that's the word coming in there on Ixigo. But that was the last query for today, ladies. So Shahina as well as Vaishali, thank you so much for joining us and helping us solve all the stock-related queries as always. And viewers, thank you so much for sending us your queries. Remember, you can email us your queries at the email ID at the top of the screens for you all. And with that, it's a goodbye from me as well as the team who put the show together. But don't go anywhere. Last hour of trade is still left. And for that, you have closing bell up next.